Hello accounts people, time to have a look at incomplete records. So in brief, a series of techniques that allows us to reconstruct a set of accounts or even part of a set of accounts when some of the information is missing. It might be missing because of failure to keep adequate records, not of course acceptable, as that is one of the primary responsibilities of a director of a limited company, or it might be an accident or disaster. So our self-employed window cleaner might have dropped the pocketbook in his bucket of water. It may also need previous year's trading. In other words, that's where we might get markups and margins from, with a little bit of judgment. We know they go up or they go down, and we may also use our judgment on the value of non-current assets. As well as for completing financial statements, might even be an insurance claim. Business had a flood or fire, needs to know value of the non-current assets, needs to know the value of closing inventory. It isn't a prescriptive method, it doesn't go step 1, step 2. We need to look at what information there is, sketch out a few T accounts and see what we can do with them. The instructions might not actually say draw out this account, but we just have to draw out what we seem to be able to complete or partly complete. There's lots of underpinning knowledge, so starting off with not the most commonly used underpinning knowledge, the VAT control account. All the underpinning knowledge comes from other parts of AAT syllabus. Definite in nearly all questions, sales ledger control account. This is the full list of course, and the question we're going to do has only got a couple of entries both sides. It might be discounts allowed or bad debts or refunds or something that's missing, or it might be the contras that's missing. Same with the purchase ledger control account. It might be discounts or contras that's missing, but more likely it's purchases or the money in the bank, or we want to check what's gone out the bank, how much of it was for purchases. So again, the question we're going to do has only got a couple of these entries in them. We also need to be fully familiar with the trading and profit loss account. In other words, the part of a profit or loss that starts off with sales, goes down to gross profit, workings out of cost of goods sold or cost of sales, and also how that relates to the sales figure and the gross profit. Might use the bottom part, expenses, down to profit for the year, but unlikely. Markup and margin knowledge and understanding is essential. We're using margin in this question. And on other questions you might need a counting equation. Assets minus liabilities equals capital, because we might be able to look at the list of assets and liabilities and work out the capital, or we've got opening capital and closing capital. We know the drawings, we can work out the profits. So we should have access to a client's bank account, and we should, if nothing else, be able to draw up a list of assets and liabilities, and if you've got last year's accounts that might be useful as well. So this is the question. I borrowed it from Kaplan. It's an old Kaplan question. It's perfectly good for our purposes. Other publishers have perfectly good questions as well. And we have got Carol, a sole trader, telling us we need to know the drawings. So that's the end result, but in the meantime we'll work out lots of other numbers. We've got opening and closing balances, inventory, receivables, payables and bank. So from that information I guessed we're going to draw out a T account for bank, the two control accounts and our trading account. A little bit more information there as well. So without further ado, let's start putting the numbers in and see where it gets us. Our first figure, we have opening inventory, and we have closing inventory, no purchases. We also have opening balance, sales ledger control account. I've left a bit more room than we need, and closing balance, sales ledger control account. Then we have our opening balances for payables and our closing balance for payables. And then we've also got, we're making the assumption that they're debit balances. It would have to indicate otherwise. Opening and closing bank balances. We're missing figures at the moment on both sides of the two control accounts, so we've nowhere near enough information in our bank or trading account. But now it tells us cash payments for purchases 58,900. Now that will also be a double entry for it, and our purchase ledger control account. Expenses, and we know that's our end result, so I might as well put that in. Does that help us? Well, now we've got an extra figure in our purchase ledger control account. We can balance it off because our purchase day book will be the difference. Assuming there's nothing else missing. 57,000. One of our key figures, we've worked that one out, and that also goes here. So with those three figures done, we can now work out our cost of sales. $56,400, and as we've got a profit margin, we can now work out a lot more figures. If that means 75% cost of sales, 25% gross profit, so profit margin doesn't say gross, we assume it is the gross profit margin, 25%, and our sales 100%. If it was a markup question, cost of sales would be 100%, sales will be 100% plus our markup. But now we can work that one out. So equals H15, take our cost of goods sold, divide by 75 times 100, and there's our sales figure, important figure. Might as well work this one out as well. Not sure whether we need it. We've got our gross profit, we can double check the percentages if we want to. 75,200, that means that will go there. One of our worked out figures, and now all we're missing is our bank figure. So balance them off. 73,500. That will help us work everything else out. Our final bit. That's complete, that's complete, that's now complete. Let's finish off our bank account. The missing figure is the balancing item of 4,600. So we've used margins, knowledge of a trading account, knowledge of control accounts to reconstruct and work out the lady's drawings. As we know how much is actually taken out of the business from the profits minus drawings plus the opening capital is her new capital, so we're well on our way to completing an appropriate set of accounts for her.